So how do we use the moving averages when we are trading the stock market, right? In this very video, we'll cover everything that you need to know about moving averages, right? When I first started out many years ago, and I used to thought that, moving averages was just all we needed to focus on, and that's it, right? But I got it really wrong, right? Moving averages is what's one part of the equation, all right? And you want to combine moving averages with several other things like the candlestick, like the price actions and all that, like the support and resistance, which are all very important to know exactly where you want to execute your trades on, and not just moving averages. Because if you just use moving averages wrongly, all right, or you just use it alone, all right, that's where you can get many trades which are in a wrong opposite direction. Alright, so in this very video, you definitely want to watch it all the way to the end if you want to know exactly how we use moving averages to kind of like find the trend. In fact, let me just go ahead to show you what will be covered in this very video right here. Alright, what is a moving average? That's what we'll cover. What does it mean? Like what's a moving average? How do we pull out the moving average on the chart itself? Alright, and we can use like a single moving average line to kind of like affirm the trend. How do we do it? And after that, what will happen is that we will also kind of like teach you how to tell the trend from a moving average. And also we look at like distance between the moving average line and the price itself. What does it mean? Well, when the price is like far away from the line, all that. Right. Next, we'll cover also like multiple moving averages, right? How do we use multiple moving averages to kind of like get the trend, all right, or to affirm the trend even better, so that we can take trades along with the trend. Next, when do you actually want to buy and sell, right? So good that you have the trend, right? You have the moving averages to kind of like affirm the trend for you, but when do you want to buy and sell, all right? So that's key, right? So many times people are just using moving averages blindly by itself, right? But you want to use moving averages with other factors. We call it the confluence of all other factors like the candlesticks, the support and resistance, the price action. And that is where if you use moving averages combined with these other factors, it will increase your probability of winning much more, rather than just looking at the line, a moving average line, and you're just buying and selling based on that line, right? It just doesn't make sense, right? So these all will be covered. We'll kind of like find out where are the zones, right? I call it the hot spots, right? Some call it the area of values. I call it the hot spot or the sweet spot or the hot zones, all right? And then that's where you want to focus on buying and selling, all right? Combined with the moving averages, right? Yeah, so we look at the confluence of other factors with moving average and not just using moving average alone. We look at support and resistance lines, and of course some candlestick patterns that we want to find, right? So this is what will be covered. And if you're keen, right, to find exactly how to use the moving average, do stick around all the way to the end of this video. And guys, go ahead to give me a like. Just go ahead to hit the like button, and of course hit the subscribe button so that you will not miss out on any new videos like this. Yes, go ahead, right, hit the subscribe button. I'll wait for you. Right, go ahead, hit the subscribe button so that you'll not miss out on videos like this. And let's move on right now to what is a moving average. So what is a moving average? Basically, a moving average is a line which you can pull out on any chart. Of course, we look at some live case studies as well, but it is pretty much a line on a chart, right, which forms the average of prices over a period of time. So it can be like a 100 days moving average, a 200 days moving average, a 5 days moving average. So based on this period, it gets the average of prices. For example, let me just show you what it means. For example, we have like maybe a few candlestick bar right here, 1, 2, all right, sorry for the ugly drawing right here. Maybe this is like a few candlestick bar, all right, and this 1, 2, 3, 4, 5, right? So this is like a few candlestick bar right here. So each of the candlestick bar represents like a day, all right, and each day there'll be what we call like a closing price. So like a closing price on day 1, day 2, day 3, day 4, and day 5. So there are like 5 candlestick bars here, so there are like 5 days. So every day there's a closing price. Alright, so how do we know what is the moving average? For example, let me just show you. So basically based on this 5 days period, alright, we can get the average of the closing price on each day. Alright, on each day, we add it all up and we just divide by 5, and that's where we get the moving average for that particular day itself. So each time there's a new day that forms up, that's where we get a new value that comes in, and then the line will be added. Right, so let me just go ahead to pull out the chart to show you what I mean. All right here, look at this chart right here. So I've just kind of like fill in the values for you. So what is a moving average? So very simple, you can see that this is like a day 1 bar, right? And on this day, you can see that the closing price, let's look at the closing price right here in the top part here. This is the closing price. Okay, and the closing price is like 249.96 on the first day. So the second day will be 249.30. So every day there is a closing price, right? So when there's a closing price, that's where we use the moving average, right? So third day closing price is 254.23, fourth day 261.16. As you can see right here, when I put my mouse over here, you can see that there's a closing price 261.16, and on the fifth day it is like 261.79. So 5 days period. So you can see this is the line right here, is a moving average, and this is the what we call the 100 days moving average line. So let me just go ahead to just show you an example of how do we actually calculate what is a moving average. So for example, now it's like 100 days, which is like this line here, but let's just go ahead to put like 5 days, since we are looking at a 5-day period. Let me just go ahead to put 5 days, and that's it, right? You can see that this is a line. You can see that this line now, it follows the bars very closely, right? From the one that's like far away, now you can see it follows prices very closely. It's very time sensitive because it's like only a 5 days period, right? So let me just zoom it in and see how do we actually calculate the moving average right here. Okay, so you can see, so this is the moving average here. All right, so this is day one, right? So 249.96. So when we draw, I mean, how do we get this line? It's very simple, right? We just want to add up this 5 days bar. So 249.96 is going to add it up, right? 249.96 plus 249.30 plus 254.23 plus 261.16, day 4, and day 5 261.79. Just go ahead and add them up, and you just divide it by 5, and let me see what I get, right? So you get it about 255.28, right? So these 5 days, the closing price of the 5 days period, you add all of them up, you divide by 5, there's a 5 days moving average, and the answer is 255.28. So let's see if it is correct. All right, so I'll just put my mouse here. All right, and yes, go ahead to look at the, okay, so look at this portion right over here, which is where it will show the value of the moving average when I put the mouse on a specific day. So right here, so when I put my mouse right here, you can see that the value that is shown there is 255.288, which is exactly the same, right? This is exactly the same as what I've just calculated, and this is exactly how we get the moving average. So moving average is more like a lagging indicator. It looks at prices over a period of time. Of course, like a 5 days would be more sensitive. It can be 20 days, it can be 100 days, right? But pretty much that is how we get the line. So every time there's a new date that forms up, we have like a new bar, a new closing price, and that's where you will recalculate to get like a new moving average, or the line will kind of like extend further, right, whenever there's a new day that is formed up. Right, so that's pretty much how we get this moving average line. Okay, so how do we use the moving average to kind of like gauge the trend of a counter, right? So let me just go ahead to put this to the 100 days moving average. So this is the line that I use. I always use the period of the 100 days moving average. It kind of gives me kind of like a mid to long term kind of outlook, about 3 months to 6 months outlook. So that's where I would put this value as back to 100, and this way you can see the line. All right, let me just go ahead to remove all the data right over here. All right, and this is the 100 days moving average right here. So how do we know if the trend is up? Just by looking at the moving average. Very simple, right? So when we have this red line, so this red line, I say, is the 100 days moving average. So we look at a period. Just now when I calculated, it was like 5 days, just to keep it simple, but in this case it's like 100 days. So you can see that this line is a bit more gentler, right, compared to the 5 days. 5 days is like really sensitive, and the line follows the bars or the prices very, very closely. But in this case, it's like more gentle. It's kind of like sloping upwards. Alright, so first thing first, when we use the moving averages, we want to know that we're not using it by itself, right? We don't want to just buy a stock because it comes down and then buy it because it just goes up the line, right? That's the wrong way to do it, right? So we want to use moving averages basically to kind of gauge the trend, right? So once we gauge the trend, then we want to find out where are the zones for entry. I'll come to that in a bit, but how do we even know what is the trend in the first place, right? So very simple. When we look at a trend, there are a few ways we can do it. I mean, we can use the moving averages, or we can also look at the whole entire market structure, all right? And also look at this, right? We can see that whenever there's like higher lows, right? Higher lows. Let me just go to draw here. So this is like a higher lows. We can also draw what we call an upward sloping channel support line. You can see right here. So this is an upward sloping channel support line when we have higher lows. For example, this is a low, this is a higher low, higher low, higher low. So we have this line that combines all the low, all right, and these lows are getting higher and higher. It shows that buyers are prepared to buy at higher prices as each day passes throughout the months, and that's a good sign of an uptrend. All right, so that's the first thing. I mean, we can also use without moving averages by drawing this line. All right, we can know that this stock is in an uptrend and we want to think about buying in an uptrend. All right, what about moving averages? So very simple. We can also let me just remove this line, and you can see that this red line is the 100 days moving average. So whenever, all right, this price, right, so whenever prices are kind of like above, all right, these red lines, so when prices are above this red line, all right, and this red line is like pointing up, it shows that the trend is pretty much in the long term. I mean, it's in the uptrend in the mid to long term. All right, and that's a point whereby we want to think about buying on dips whenever it kind of like nears the moving average, all right, or whenever it kind of like breaks out to a new high. So there are a few ways you can do it, but basically, in an uptrend, the price is above, or the stock price, this stock is above the moving average, this 100 days moving average line, and the line is pointing up right here. So you can see that all this while, I would say somewhere from here, all right, since like March all the way to, you can see it kind of like reversed back down, and we kind of like respected this 100 days moving average, kind of rebounded from it again, started to push up, and that's where the lines still continue to point up, and somewhere around here, that's where you can see that prices started to cross back down below the moving average. So crossing back down below this moving average doesn't mean that it's bad, the trend will turn all the way down. It's just a sign of probably some profit taking, or maybe from an uptrend. All right, from an uptrend is like pretty much going back to what we call like a consolidation phase. That means from an uptrend to a sideways trend, right? So it means it's like moving or consolidating sideways. So it doesn't mean that it's a downtrend. It's probably back to some consolidation if prices were to go back below this red line. And then again, if we see this red line, this 100 days moving average start to flatten out, all right, then all right, with prices like moving up and down, this moving average and this 100 days moving average kind of like sloping or kind of like flattening out flat, it shows that we are in a consolidation phase. So when we see this, it's not really an uptrend, so you can think about buying as well, but you want to think about buying at prices which are more favorable, or you can buy on dips at some of those good support levels. That will show you how to do it. Right, so let me just go ahead to remove all these lines here, okay, and this, right. So we can also go ahead to draw like what we call the horizontal support and resistance line. I think those are very, very important. I'm just going to put it as black in color, right? So this is like the support and resistance line, right? And you can see that we were pretty much back to some consolidation right here. Right, so kind of like push up, and then we started to hit a bit of resistance at about the 250. I think 250 was a bit of a resistance here for this stock. Push up, came down, rebounded, came down to this support, went up, came down to this support, and started to rebound. And as it happened, look at this, the red line, the 100 days moving average, started to flatten out. Right? So that's a sign of the trend kind of flattening out as well. So that's the first thing on how we use moving average. Right? I'll talk to you a bit more later on when do we actually want to buy and sell, but at least now we understand how to use the moving average. So let's take a look at another chart. So this is a stock right here, and you can see that this line, the 100 days moving average red line, is kind of like pointing down. All right, so it's like pretty much in a downtrend for a couple of years. All right, you can see prices is like all this while mainly below the line. So in a downtrend, all right, this is where prices are below the red line, and the red line is like sloping down. So it was like flattening out, and then it started to point down, and prices are below this line. So this is pretty much in a downtrend. So in a downtrend, take note that you wouldn't want to be holding on to stocks in a downtrend. So if you're holding on to stocks, if you pull up your chart and then you see that the stocks you're holding on is like that, right? Whereby it's like in a downtrend, the moving average line is pointing down, and these prices are below this line, then you want to be careful, because we never know how low a stock can go. All right, so you're gonna think about getting out first, stop loss, reduce your losses, all right, and then get out and then wait for like a clear reversal up before getting in again, rather than just holding this stock all the way down, right? So that's how we can tell whether is it a downtrend. Pretty much just opposite from an uptrend, whereby you want to see prices kind of like staying above the line and the line pointing up. Right here you can see, right? So it kind of like turn from a downtrend. All right, and then this line started to flatten out. So remember, look at this, right? This 100 days moving average line, it doesn't just go from like down to up in like 1 week or 2 days, right? It doesn't do that, right? So we've got like kind of like down, 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 started to flatten out for like maybe 2 or 3 months, and started to point up. And when it started to flatten out, You can see that's when prices went back above the 100 days moving average line right here. You can see push up, came back down, and it kind of retested this moving average line, which kind of like forms a bit of a dynamic support level. All right, and we rebounded off this moving average, and that's where the uptrend started to happen, because we see the line, same thing, right? We see the line starting to point up, and prices are, you know, above this line. So we are pretty much we have turned from like a downtrend to an uptrend, right, for this counter, just by looking at the moving average itself. Of course, we can go into draw, as I say, the trend line. We call it like a channel support line right here. As long as we have higher lows from the market structure, right, higher lows, it shows that buyers are prepared to buy at much higher prices as the months plays out, right? And that's a good sign of the stock, you know, kind of like pushing higher. And as long as we were to hold above this upward sloping channel support, then that is a good sign that the uptrend can continue, right? And so as long as we hold above this 100 days red line, the moving average, that's a good sign that the uptrend can continue, and that's where we want to think about buying as well. So now that we have looked at this moving average line, and we kind of know whether is it like an uptrend or downtrend just by looking at the line and where is it pointing up and down, where the price is, we want to just dive deeper into like what about distance between the line and the price. So we want to focus on the vertical, I say again, the vertical distance between the line and the price. For example, right here we can see like there's a fair distance between the line. Let me just go to draw. So it's like a vertical distance right here. This is the line right here, and this, you can see that this distance is a bit shorter, all right, and right away here it's a bit further again, right? So that's the vertical distance between the price and the line itself, right? So normally when the line is pointing up, all right, and we see that you know, the moving average is pointing up and price is above the line, that's a good sign of the trend, right? So whenever we see like a fair distance, it means on average this distance is pretty much quite similar, or of like what we call like the average of distance, vertical distance, then I would say it's quite a good uptrend, right? So it's pretty good uptrend. You can see that all this while the vertical distance is about the same. It's about the same. We are keeping at quite a good distance away from the line, and this line is pointing up, so that's a very, very good uptrend, right? But just to take note, each time, if ever, right, if ever the line, or basically the price, were to like trade up all the way and prices were to rally so much, like you can see right over here, when prices were to rally so much up and the distance between the moving average line and the bar itself is like way further than the average, right, that we've seen over the past few months, then that's where it can be overextended. That's where we might actually see a pullback of prices back to nearer, all right, to the moving average, like what we see over here. So you can see it kind of like overextended. It raised from like 110 to like 150. That's like overextended, right? I don't know how many, 10-20% in like a few days. That's where it started to pull back, and we see these prices coming back nearer to the moving average line right here, and that's like back to the fair distance, right? I think you get what I mean, right? So that is how we look at the distance between the line and the prices itself, right? But overall it's still in an uptrend, but just that if it's like too far away, all right, from the moving average line, then you might want to be careful, because prices might have just rallied too much and overextended, and we may actually see some profit taking with prices kind of like retracing back down to nearer to the line, like what we have seen all this while. So like kind of like, you know, we trace back down again, all right, and we are back to the fair distance again as well. Right here you can see that is the distance. You can see it's pretty much back to this same fair distance, all right, and then we kind of like, you know, sold off, all right, sold off. Maybe the market has tanked, it kind of broke the support level, and we were back to this line, all right. So you can see prices kind of like traded back to this 100 days moving average line here, and we saw quite a good candle. So this is something like what we call a hammer, all right, basically one candle with like a lower shadow, all right, which means buyers kind of like coming back at the day end to push prices up. And we saw this candle right here at the moving average, which forms a bit of like a dynamic support level. That is a good sign, right? That's a good sign. That's where you can see the rebound really started after this candle started to push up all the way, and you can see that's where it started to rally up. And when we approach this, whereby the distance, right, look at this, the distance between the line and the prices is kind of like overextended again. You can see right over here, it was like normally is just about somewhere like this, all right, but we kind of overextended and we started to consolidate and pull back again, right, kind of pull back again. And this is where we are right now, right? So you can consolidate, as I say, prices have gone back below this red line. All right, the red line is starting to flatten out. So it was like a bit of a consolidation phase, but it started to push up recently. Right, so yes, we have pretty much covered how not just to look at the line and the prices itself, whether it's up or down, but more or less we want to dive deeper into in terms of the distance between the line and the price at that point in time. Is it like a fair distance, or all is well, or is it like overextended, and that's where we can see a retracement happening back to the moving average, whereby it's a bit nearer. Okay, so we're pretty much looking at just like one moving average line. In this case, this red line is the 100 days moving average, right? So it's a bit of a midterm, all right, 3 to 6 months kind of outlook, and I think you more or less know how to tell whether is it an uptrend or is it in a downtrend. But what if we were to add one more moving average line? So let me just go to add one more moving average line. You can also do that, right? So let me just show you how we do it. You can just pull out the moving average, just click on it, and this moving average that I would like to add would be what we call the 200 days moving average. So that is the kind of like a blue line for me. It's a bit of a longer term moving average. As you can see right over here, we have this blue line that kind of like slopes downwards more gently, all right, compared to the 100 days moving average. So you can see this blue line is like a longer term, it's like a 200 days, 6 months to a year kind of outlook, and it kind of give us a hint on where the longer term trend is. All right, so just by using this blue line itself, same thing, when the price, all right, when the prices are below, okay, let me just go ahead to hike maybe this red line first, right? So the red line, I say, is the 100 days moving average. So now we look at the longer term moving average, which kind of like hints or points towards the longer term trend. All right, so same thing, it's the same logic with the 100 days moving average, right? When the line, all right, this blue line, all right, the longer term moving average, the 200 days moving average is pointing down, all right, and prices are below this line, it can show that we are in a downtrend, and you want to be careful. All right, we don't want to be just holding on to stocks blindly, because you can just hit lower and lower and lower, and you have no idea how low it can go. All right, even think about like taking short position shots. All right, you can use like CFD to take short positions right here, especially if any of those key support levels are broken. Like you can see right over here, it broke the $190, $2, it broke, and that's where it started to sell down. It broke the 160, started to sell down. Or maybe if you like to rebound back up to some of those resistance, that's where you can take short positions to ride the downtrend. All right, when prices are like below the 200 days moving average, right? So look at this right here. So same thing, when the line, this blue line, starts to flatten out, so you can see it points down, 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 flatten, and it starts to point up. So it doesn't just go from like down and up, in like a few weeks or 1 month. It probably take like 2 or 3 months for it to happen. All right, and that's where this line started to point up, and prices have also crossed back above the 200 days moving average, right? So that's a sign of the longer term trend starting to turn up as well, right? Turn up as well, and that's a good sign of thinking about getting in, right? Loading up and catching the uptrend, to ride the uptrend for this particular counter, right? So that is the 200 days moving average, right? So let me just pull out back the red line. So now we have like two lines, the 100 days moving average red line and the 200 days moving average, the blue line, right? So just by looking at these two lines, of course, we know how to tell whether is it an uptrend, downtrend from the price and each of the line individually. But what about just by looking at these two lines itself, right? Just by looking at these two lines itself, how do we tell and affirm the trend? Very simple. When, all right, so this is the short-term moving average, the red line. So when the red line is pointing down and the blue line is pointing down, so both of these lines are pointing down, and the short-term 100 days moving average is below the blue line right here, we can also say that this counter is in a downtrend. Right, it's a downtrend, and that's where we want to think about shorting and riding downside. However, look at this right here. So this look at it. This red line was pretty much down and below the blue line, but started to consolidate. You can see it started to flatten out. This red line started to flatten out, and eventually, right, we went above the blue line. We started to cross. I mean, in order to be above the blue line, you need to cross above the blue line. Makes sense, right? So this is where it happened. It kind of like crossed above the blue line and started to point up, right? So that's a good sign of the trend starting to happen, all right? And of course, this blue line as well started to flatten out and eventually point up as well. So we have pretty much turned from like a downtrend to an uptrend. Now, this 100 days moving average line, the red line is pointing up. So a short-term moving average above a longer term moving average. All right, so red above blue and both lines are pointing up, then we are in an uptrend, and that is where we want to think about buying. All right, buying on dips, buying on a breakout. That's where you think about buying to kind of ride the uptrend of this counter. All right, so this is how we look at it, right? Look at the trend just by having two lines. So we just added one more extra line, nothing complicated. It's just two lines, and it's, I think, even more easier, all right, on how we can gauge a trend just by looking at these two lines and where it crosses and whether both of them are pointing up or they are pointing down. So guys, if you like this video so far, go ahead and give me a like. All right, it will definitely help out the YouTube channel, and thank you so much for doing this, right? So let me just do a quick recap of what we have covered so far. So we covered like what is a moving average and what does it even mean. All right, we actually covered like how to calculate like a 5 days moving average, but of course we're not using 5 days, we're using like the 100 days and the 200 days, but at least now you know how the line actually forms up in terms of the calculation behind. Then we actually look at like a single moving average. So I'll kind of like put out the red line, which is the 100 days moving average first, and you know whether the line is like pointing up or down, and where are the prices in relation to the line, right? So if the line is pointing up and price is above the line, we are in an uptrend, right? So we kind of like cover that, and then we also dive deeper into like the distance, right? The distance between the line and the prices itself. Are we like a far away from the line? Is it like a fair distance, or have we like just gone up too much and it's like overextended, and we might see like a retracement back to it and coming back nearer to the moving average line, right? So that's what we have covered. And then after that, we kind of look at the moving averages, whereby we added one more new moving average, which is like the 200 days moving average, which is like the blue line for me. So we have like two lines now on the chart. The red one is the 100 days moving average line, and the blue one is the 200 days moving average line, right? So I hope it kind of like makes sense to you so far, right? So we're kind of like, just by using moving average, we kind of like know in terms of the trend, whether I'll be in like uptrend and downtrend. But so what do we want to do now, right? I mean, how do we know when to buy? I mean, because so far you can see that when we have covered moving average, I've not really talked about like buying and selling. It's not like because it went above that line we just want to buy, or it went below we just sell. It doesn't work that way, all right? And so when do we want to buy and sell, right? Combined with whatever we have learned for the moving averages. So this is what will be covered right now. When do we want to buy and sell? Basically, we want to look at the other factors, right, together with the moving average. So in an uptrend, we want to think about buying, but where do we want to buy? So that's where we look at things like the support and the resistance line. I'll show you how it works, and also if we can see any candlestick patterns, so right, near the moving average line or near a particular support. If it were to like retrace back down, it's near a support, or it's like near a moving average line as well. That's where we see like a bullish candle. That's where a rebound can potentially happen. So let me just go to show you some case studies, all right, as we go through some charts and see where are the potential levels we can think about buying and selling, combine, all right, whatever we have learned using the moving averages. Okay, so let's take a look at this stock right here, and I think all of you would know that this stock is pretty much in an uptrend right now, right? Because you can see that based on this moving average line, as I say, this red line I would say is kind of like sloping upwards gently. Of course, not as good as it was here, but it's still sloping upwards gently. And this blue line, which is the 200 days moving average for me, all right, it's still sloping upwards, right? So both of these lines are sloping upwards, and that's a good thing. But more importantly, you can see that this red line is obviously above the blue line, right? But if we do see like this red line coming down, or maybe like pointing down and then like crossing back below the blue line, then we want to be careful, because there might be a change in trend, or maybe it might just go on to some consolidation first before we see a bit of firmer direction. Right, so in an uptrend, we want to think about buying. So how do we know when to buy in an uptrend? So firstly, what I would do is to go ahead to always draw what I call the horizontal lines, which kind of like gives a bigger picture, all right, or where the certain levels whereby it has kind of rebounded from, or certain levels whereby selling have came down from. All right, so let me just go ahead to draw this line first before I show you what I do. All right, so this is a line right here. I would say this is like another support here. We have rebounded, and maybe another, this is definitely a support line. Let me just go to draw one more line before I explain to you guys. Right here, one more line here as well, that would be a support, and maybe one more line over here as well. All right, so okay, let me just go ahead and draw maybe one more line right here as well. All right, so this is it. All right, okay, good. So I'll not go too far, but you can see that just somewhere right here, all right, somewhere around here, you can see that that's where, as I say, this red line started to kind of cross upwards above the blue line, right? So when the red goes above the blue, all right, and both the red and the blue line are pointing up, that's where the uptrend has started, right? So where can we think about buying? So we can think about buying whenever we can see prices kind of like forming a bit of support. You can see we kind of like held above this level, and that would be about the $90 level. We went up, came back down, went up, came back down, and it's a bit of a support level. So that could be areas, right, whereby we can think about loading up, right, to catch the rebound, right, in an uptrend. Because at this point in time, you can see that when it happened, when it was consolidating here, it was in an uptrend already. So your mind have to think about buying, but where do you want to buy? You want to buy when it were to retrace back down to near the support level. In this case, this support level was around the $90. You can see it kind of rebounded 1, 2, 3, 4, and that's where it started to rebound back up. And what about the levels whereby it kind of rebounded from this $90? So that is a support level, all right. But what if we can see like some bullish candles at this level right here? You can see that this is what we call something like a doji, all right. So we have like a long upper and lower shadow. That's a sign of a reversal or a sign of indecision, and whenever we see it like near a support level, that's where we can potentially see like a reversal back up. So we kind of like saw this here, all right. Look at this right here. This is another like a hammer, or we got long lower shadow, kind of like retrace back down. We saw this started to rebound back up, all right. Sellers came back, push it down again. You can see we went up again. Sellers came back, push it back down again, but we didn't like go all the way down. We were still kept below, we were kept above this support level at $90, and eventually we rebounded up, and this was where we were, right? So all the way from 90, we went up to like 120, and that's like about a 30% rebound. So we don't think about buying when it kind of like dips to some of those good support level in an uptrend, all right, in an uptrend, right? So we can see that it's an uptrend based on the moving averages, which we have covered, and now we draw our support and resistance lines. And if we do like see some bullish candles near this line, that's where we can think about getting in to ride the rebound. Of course, hopefully a break of this resistance to push higher to the next upward phase, all right. That's the first thing, right? Also, we can also use like the moving average as like a dynamic support. As I say, whenever prices were to kind of like trade up, kind of retrace back down, you can see right at this point in time, kind of retrace back down. And the distance, right, the distance between the moving average line, this red line, and prices have kind of like come to a very, very thin amount. So that's a good sign whereby we are approaching what we call the hot zones, right, or like those sweet spots whereby it provides a lot of value. A lot of bargain hunting might come back again, because it's like from this distance, we talk about the vertical distance between the line and the price. So all this while you can see that this is like quite a far vertical distance, very a lot, all right. Vertical distance up, and we retrace back down, and look at this, the vertical distance between the line and the price at this point in time has kind of like thinned out to a very small amount. So that's where we can see value emerging again, all right, in an uptrend whereby buyers might start to come back up. And of course, we did see like quite a bullish candle here, and so there are three things, right? We saw a bullish candle. It is near the 100 days moving average line, which it kind of like respected all this while it's holding above. So that's number two. Number three is also where the horizontal support level are. So these three things have been met, and that's where we started to see a rebound up here all the way up to the 120. And why 120? Because look at this, 120 was like the resistance level, right? We were like kept below that. So when we broke the 120, good, that is like a next phase up. Something like a staircase, right? So when we break that resistance, we kind of like go from like the first level to the second level, and then we are like consolidating in the second level. Hopefully we go to the third level again. All right, so that's how the stock market works, right? So pretty much went from here, and then we kind of like broke above that 120, and that's where it started to consolidate higher. And let me just see, look at this, right? It fits really nice. Look at this, right? So this was the original consolidation phase. So I've not like changed this target, right? But I can just drag it up here, and you can see it kind of like fits really nicely. And that was where it kind of like consolidated again, right? It kind of like the same range from 120, and this time to around the 150, 155, maybe a bit more right here. And that's where it started to consolidate, right? So this resistance level, you can see, was like resistance. It now became a support level, right? It became a support level. So prices went up, all right, came back down, and that's where we approached this support level, rebounded off, went back up to this resistance, came back down. You can see it rebounded a bit, came back down, and look at this. This was a candle right here, and this was it. Look, this is what we call the very, very good hot spots, right? Hot spot, because we are right at the 100 days moving average line. So three things, right? We are right at the 100 days moving average line. That's number one. Number two, we are back at this support level. And why is this support? Because it's resistance at 90 turn support. So first thing, we are back to this 100 days moving average line, which forms a dynamic support. Number two, we are back to the horizontal line, which acts like a horizontal support based on previous prices because the resistance has turned support. That's number two. Number three, we did see like quite a good bullish candle right here, whereby we saw a candle with a very long lower shadow. So it kind of like opened higher in the day, went down. You can see it went to a day low of about like 118, right, below the 120 support. And people think like it might come all the way down, but what happened? Buyer came back up and pushed it back up above the 120, right? So this 120 support still holds and still stands, right? So when we saw this candle right here at this hot spot, or this area of value, right? So this could be what we call an area of value, whereby we look for candlestick patterns like this, and and also if it nears the moving average. So that's what we call the area of value right here, or the hot zones, right? So this is the potential target that was drawn. So it kind of like rebounded, and then we were like consolidating, and eventually, of course, we broke the 155. And started to trade all the way up, all the way up to around the 250, and started to consolidate right now. This is where we are, right? So I think we are pretty much back to some consolidation for this counter. All right, for about like 160, 170 to about that 250. That is where we have been consolidating, right? And you can see prices kind of like traded lower down, and it kind of like went below this 100 days moving average, which is like kind of like pointing up, but it's like flattening out right now. So we are a bit of a consolidation phase. Of course, started to push up, but I would say right now, where are the like zones whereby we can time our entry, right? This is the zone right now, because you can see we have already broken this like 250 level. So 250, as I say, was like the resistance. We broke up, and when we broke up, you can see this is probably another resistance right here, and we are potentially trying to hold above that 250 level, which is okay, which is good, right? But the thing is, if we were to break below the 250, you can see we might actually retrace lower back to the next support level. This was like a resistance. This is probably somewhere around the 230. And when we approach this level, we see like a new bullish candle around here, and you can see that's where prices kind of like approach the moving average, and it's very near the moving average, whereby we might hit like an area of value again, or a very good hot zone again, whereby the uptrend can start to continue, whereby we might see a bit of a rebound. And this is where we can think about getting in again if we were to see some of those really good bullish candles right here, like a hammer, like we've seen a few times. Look at this right here. This is like another bullish candle right at support level. Another bullish candle. This is like a bullish engulfing pattern right at the support level. You can see this is quite a good candle. This is like a bullish engulfing, whereby buyers just came out and kind of like at the day low, it closed all the way at day high, completely engulfing the previous day bar, and it kind of happens right at the support level at 170, and so just above the 200 days moving average, the blue line. So that's a sign of strength. So it started to rebound after looking at this bar here. All right, so same thing, when we see prices kind of like coming back down, all right, to this area, right, these zones, maybe from 220 to 230, and we do see some bullish candle here, that is where we can potentially see a rebound back up, right? So I kind of like explain, not just using moving averages, looking at buying and selling on moving average, but we pretty much want to look at the support and resistance first of all, and then combine it with some of these candlestick patterns that we can see at these zones. All right, so we talk about three things, right? So first of all, it must be an uptrend to think about buying. Secondly, we want to think about the prices kind of approaching the moving averages, whereby the distance between the price and the moving average is very thin, right? It's like pretty much very near, and that's where we might approach an area of value. That's number two. Number three, we look at the horizontal support level, whereby the prices approaches the support as well, and that's where we might potentially see a rebound. And number four, we look at if there are any candlestick near this support level right here, like where we've seen a rebound. there are any bullish candles that can lead the recovery back up, right? So these are the points we look at it, whereby we look at the confluence of factors to see if prices can actually continue the uptrend and when actually to buy and sell. Okay guys, that's it, right? So I think I pretty much covered quite a bit on moving average, and also how do we combine the moving average with several other factors like the support and resistance, the candlestick line, and whether or not the prices to kind of like dip to some of those moving average as well, right? So there are a few factors, as I say, we want to use these factors all together, combined with whatever we have learned for the moving average. So moving average is basically how it kind of like guides us on the trend, right? So as long as we know what the trend is, then we can think about getting in the same direction as the trend, right? But as I say, we don't really just use moving average to just buy and sell, because you know the price can just cut up and down the line, all right, and it just doesn't make sense if you just buy and sell based on that particular line, whether prices moves up or down it. All right, so we want to look at the big picture, whereby we look at the trend first, and then we dive into like the zones, right, or the areas of values, right? I've talked about whereby prices were to dip to this moving averages in an uptrend, very good support found, and we might see a rebound from it, or if we see like a bullish candle near this moving average, or if it also coincides with like a horizontal support level, that is the best, right? We get like 3 or 4 points, like these 3 factors all pointing to the right direction. That is where there's a very high chance of a high probability trade, and that's where prices can see a rebound and for like the uptrend to continue. All right, of course we have pretty much covered in terms of the upwards direction, the uptrend, but of course in the downtrend, then it's pretty much just opposite. All right, we want to think about shorting, about selling, and if it kind of like rebounds to like a moving average that's pointing down, that's where we can take short positions to ride the downside. Okay, so I hope you have kind of like liked this video, and guys, if you like this video so far, you have learned something, go ahead guys, give me a like. It will definitely help out the YouTube channel. Of course, if you have not yet subscribed to the channel, right, the YouTube channel, go ahead, take a second or two, all right, go ahead to hit the subscribe button so that you will not miss out on any videos like this. Yes, go ahead, correct, smash the subscribe button, bam. All right, and that's where you will not miss out on any videos like this, and I really appreciate you doing that as well. It will definitely help out the channel, right? So I hope you like this video. Thank you so much for watching. If you're still sticking all the way to now, all right, and you're still watching this video, thank you so much, and I look forward to see you in the next video, right? And also go ahead guys, before you do anything right now, go ahead to leave a comment below, right? Leave a comment below, let me know what is your biggest takeaway in this very video, whereby we talk about the moving average stock trading secrets. What is your biggest takeaway as a beginner, or if you're an expert? What is the biggest takeaway? Let me know in the comments below, and I will definitely reply to your comments one by one. All right, so thank you so much for watching. Joey here. I look forward to add value and see you in the next video. Take care.